In recent days, the rial plunged to historic lows, a shock reverberating through the streets of Tehran, Istanbul, and beyond. On the black market exchange, $1 now commands roughly 1.2 million Iranian rials, a staggering collapse that few living Iranians could have imagined a decade ago. Economic sanctions tied to renewed nuclear tensions, coupled with long-standing inflation and shrinking foreign currency inflows, have combined to cripple confidence in the currency. A currency in free fall. Traders say the crash accelerated after international pressure mounted. According to local exchange rate trackers, the dollar breached 1.19 million rials last week, the highest level ever recorded. The gap between the official exchange rate set by state institutions and the open market value has grown to more than 466,000 rials, a gulf that underscores how distorted the economy has become. Many Iranians now rely on informal money changers, hawala networks, or even cryptocurrencies to preserve what remains of their savings. The sharp devaluation has devastated life for ordinary Iranians. The rising costs of food, fuel, medicine, and other essentials are laying bare the human cost of macroeconomic collapse. With foreign reserves dwindling as oil exports remain constrained and international liquidity drying up, there seems little hope of a quick recovery. Against this backdrop, the government is debating a radical reform, slashing 4 zeros off the rial. Officially, the currency would retain the name rial, but one new rial would equal 10,000 of the current rials. While proponents argue the move would simplify accounting and ease daily transactions, critics warn that this symbolic step cannot fix the root causes: sanctions, structural economic weaknesses, and rampant inflation. Voices from the street. A 53-year-old electrical engineer summed up the mood across Iran. Life will not only become more difficult for ordinary people, but it will also fuel public concern over whether the government has the resources to maintain and repair the country's aging infrastructure. For many, the choice is stark: watch their savings evaporate, or buy what remains of their value in gold, foreign currency, or cryptocurrencies. What's behind the collapse? The immediate trigger behind the latest drop was the re-imposition of nuclear-related sanctions by the United Nations. European powers invoked the snapback mechanism, reinstating penalties that restrict Iran's oil trade, freeze overseas assets, and block access to international banking. The move came after a breakdown in negotiations over Iran's nuclear program and mounting concerns about ballistic missile development. With sanctions biting hard, Iran's ability to earn foreign exchange, traditionally derived from oil exports, has shrunk dramatically. At the same time, inflation has soared above 35%, making everyday goods drastically more expensive. The rial was already under pressure, but the new sanctions turned what many hoped was a manageable adjustment into a full-blown currency crisis. One local currency tracking site recorded the rial trading at about 1,203,000 per dollar, with the official exchange rate still lagging far behind, under 740,000. This divergence underscores the collapse in trust. The state rate reflects only limited regulated flows. The real economy has shifted to an informal cash-based system. Consequences for everyday life. The result is what many in Tehran describe as economic shock therapy. Households that once managed to scrape by are now forced to choose between essential goods. Prices of staples such as meat, rice, and fuel have soared. Medication and healthcare, already difficult to access, have become even more expensive, exacerbating fears of shortages in essential drugs. Savings, once safely kept in rial, have lost their value almost overnight. What once seemed a modest nest egg now barely covers a month's expenses. More and more Iranians are turning to gold or foreign currency, and some even to cryptocurrencies, in a desperate bid to preserve value. Public anxiety runs deep. If the current trajectory continues, many fear not just economic hardship, but also broader social unrest. Already, some warn that the government may struggle to maintain basic public services or repair infrastructure now deprived of foreign exchange revenue. Redenomination or cosmetic fix. To address the crisis, lawmakers recently approved a plan to redenominate the rial by cutting 4 zeros. Officially, the currency's name would remain unchanged, but price tags and banknotes would be recalibrated to reflect a new scale. The idea, pitched as a way to simplify transactions and make life easier for ordinary citizens, has drawn both support and skepticism. Proponents argue redenomination could at least help psychologically, dealing with smaller numbers, simpler bookkeeping, less confusion. But many economists warn that the reform is largely symbolic. Unless accompanied by deeper structural reforms, stabilizing exchange rates, restoring foreign exchange inflows, controlling inflation, the new rial will likely suffer the same fate as the old. Critics say redenomination alone cannot overcome the underlying economic pressures: sanctions, restricted oil revenue, inflation, and eroding public trust. For them, the real solution would require rebuilding Iran's access to global financial systems and restoring stable trade flows, a difficult task given the geopolitical tensions at play. The broader implications? The plunge of the rial is not just a domestic catastrophe, it could have regional and global ripple effects. With Iran's oil exports severely constrained, global energy markets may feel the strain. Neighbouring economies already reeling from inflation and economic instability could see a further wave of refugees or increased smuggling of fuel and goods across borders. At home, widespread economic pain could erode public confidence in institutions and drive popular discontent. Already, many Iranian households face difficult choices: basic necessities or long-term savings. Businesses, especially small merchants dependent on imports or raw materials, risk collapse as costs spiral out of control. Meanwhile, the proposed redenomination, if implemented, could create short-term chaos: confusion over prices, reissuing of banknotes, recalibration of contracts, and if underlying conditions remain unaddressed, the new rial may simply become the next version of a devalued currency. The hard truth: the collapse of Iran's rial is more than a statistic, it is a harsh reality for millions. The value of hard-earned savings is eroding, the cost of living is skyrocketing, and stability feels out of reach. While redenomination offers a veneer of hope, many know it cannot erase the deeper wounds. Unless Iran finds a way to rebuild foreign exchange inflows, ease sanctions, or restore trust in its economy, the rial may continue its descent, taking with it the livelihoods and hopes of ordinary people. The coming months will test not just Tehran's economic resilience, but its political and social stability as well.